Hello and welcome to FT Markets here in New York. This week we're going to see a gathering of global securitization bankers in, of all places, Barcelona. For the last 3 years they've been gathering in Brussels to discuss trends in their industry. But now they feel a little bit more comfortable about moving to a city that has a lot more to offer than just a boring old convention centre. Joining me now to discuss what is likely to be the big topics of conversation amongst this global gathering is Tracy Alloway. Tracy, good to have you with us again.
My pleasure.
So, what's going to be the big topic for discussion, do you think, that's going to come out of this securitization gathering?
Well, I think one of the big trends that we've seen is a strong issuance of securitization, which is really loans that have been kind of sliced and diced and sent into bonds, which you can then sell to investors. I think in the US market, sales of these structures has been pretty strong, particularly in areas such as corporate loans. These are bundled into collateralized loan obligations, commercial mortgage-backed securities. Those have really been booming, and particularly in the CLO space, we've seen very strong sales, and it looks like we're on course for record sales this year. So that's fantastic from the point of view of the bankers who create these securities. One thing that is missing, particularly in the US market, are the kind of mortgage-backed securities that gave us so much trouble in the run-up to the financial crisis. Those really haven't come back at all.
Now, is that a good thing or a bad thing?
Well, I think you could probably spin it either way. Obviously, securitization is an important financing tool for a lot of loans. And in fact, in Europe right now, we're seeing regulators and the European Central Bank as well really trying to restart the market. They want banks to create these securities so that banks can finance their loans a bit more efficiently and increase their lending.
So it looks like it's a tale of two markets when you look at the US versus the European market. I mean, how important is it that the ECB and regulators in Europe get their market up and running?
So we did see some commentary from the ECB about this last week when they announced negative rates and all of that. They basically laid the groundwork for future purchases of securitizations in the European market. This is kind of what everyone was hoping for. However, there is some talk now that actually, when you look at some of the other stuff they announced last week, that's just going to encourage banks to continue to tap the ECB's own liquidity facilities for their funding. In other words, they're not going to feel any need or pressure to go out and issue securitizations.
So ultimately, it's not really going to jumpstart the economy.
It looks debatable at this point, but I'm sure there will be plenty of talk about it in Barcelona this week.
Well, as the sangria undoubtedly flows, as bankers discuss the latest trends, it'll be interesting to see exactly what comes out of this week's gathering in Barcelona.